Hi, and welcome to this edition of the market analysis for today, August the 8th. I'm Giovanni Benacourt, educator and trader with Advantage Markets. So, the long awaited passage through the Senate of the tax and energy bill spells good news for electric car makers, renewable energy, and fossil fuels firms that can take advantage of new tax credits. The legislation isn't so good for giants with whom Medicare will be able to negotiate drug prices for the first time, and tech firms such as Alphabet and Meta platforms who are faced with a minimum 15% corporate tax rate and a better resource Internal Revenue Service to enforce it. The Democrats hold out hope that the 430 billion program will curb inflation in time, but by some measures that might already be happening before the bill arrives on President Joe Biden's desk. The consensus for July's consumer price index due out on Wednesday is for a headline of 8.7% rise, compared with 9.1% last time, which was the highest since 1981. That progress, and not unexpected, given receding fuel prices, but policymakers are more focused on core CPI, which strips out volatile food and energy costs. That measure is expected to have ticked up from 5.9% to 6.1%, reversing a trend of easing since March, with soaring rent costs as key culprit. If that's the case, the Federal Reserve will be further emboldened to lift interest rates by another 75 basis points at the September FOMC meeting. Now, Friday's blowout jobs report showing the U.S. economy added 528,000 jobs in July, more than twice what was forecast, solidified that the rout in investors' minds. Stocks ended last week lower and U.S. Treasury yields surge. Corporate earnings are beating expectations this season, including those of Berkshire Hathaway over the weekend, which signals Jerome Powell has room to act. The fact is that new legislation takes time to feed through the economy, whereas the Fed has immediate impact. Now, relating to this particular bill, where obviously all the good news for renewable energy, green energy, we have to take into consideration one particular asset, one particular metal, and that will be copper. And let's take a look at copper. Copper is highly needed in this industry. All right, so copper being obviously a resource to be mined, and as I understand it, that we don't have enough of it produced. So there's going to be a lot more. There's going to be a lot more mining to be done in copper. There's obviously Chile, a big copper mining facility, but also Pakistan is coming into is online, and that industry, or obviously having that mine up and running, is going to take some time. So as the demand for new resources, new renewable energy, clean energy, green energy continues to increment, obviously the demand for copper will also be there. As that, we take a look at copper chart right now, and we're seeing that copper has obviously coming on a move to the upside, and so to see copper break our resistance of 359 is not far fetched. All right, seeing this movement, we are obviously kind of sort of like creating. We have seen a double top around here, made a pullback, found support at 340, and then you jolted up to about 358. From this moment, copper has really been in a consolidation stage. Now, as the market opens and all this news comes out, we could probably see a breakout out of copper. That breakout, I'm inclined for it to be to the upside, but then again, a shorter pullback towards the pivot can be also be seen. But I'm shooting more for a breakout to the upside looking to come out and break our resistance 360. Now let's take a look at what has copper done in in the past. Let's just wait for our chart to populate here real quick. Let me see. Let's see. Our monthly. Okay. A monthly chart. All right, let's take a week. Let's look at a week chart. It takes a bit of time to load. All right, here we go. Let's contract our chart. So $5 will be something to look at, which we obviously reached earlier in the year in February. So taking a look at $5 by the end of the year is not far-fetched. So obviously we still have to first break our resistance of 360. As we see in the past, this area has been of interest. From here it broke out to about about 480, then we hit the 5 mark. So looking at 4 initially is something that we can probably be seeing in this coming months. So let's take a look at what other markets are doing. So on Friday, the market Nasdaq closed on the downside, on a negative leg. So we could probably be seeing that same scenario to be happening for today. The S&P 500 also, it looks to be that it will be opening on a downside. We have crude oil. Crude oil, we'll be seeing the OPEC meeting coming out also later on this week, talking about their levels. We saw last week OPEC Plus come out and saying that they were going to increment only 100,000 barrels per month, per day, next month. And let's see what would OPEC say this week. Looking at $86, the support level is something very feasible. So that's where I believe the market will be heading it to. Looking at $80 at the end of the year could probably happen. But then again, we have to see, because obviously Saudi Arabia, I believe that they're selling their crude oil higher to Asia rather than lower. So we got to keep an eye on crude oil. Here's Nat Gas. Nat Gas is looking obviously to open up on the downside. We're having a sell-off here on Nasdaq. We have broken we're actually violating right now our support level on natural gas. Gold. So let's take a look at gold and see if our CPI on Wednesday comes up to be higher than expected, out of the 8.7% and around 9%, we could probably see a nice pop, a nice spike on gold, breaking that 1800. Should we see something lower than 8.7%, let's say 8.5, 8.3, then we could probably see a drop on gold, okay, on that news alone. So let's keep an eye on that. And silver, look, silver is looking right here to break our resistance. It has come out, it touched it, it has retraced from it, and we could probably see silver come out and come, if it does break our resistance. 2050 is our next point. We have seen obviously making a double top here around that level. Should we come out to 2050 again, that would be our triple top, and that could probably send out some sellers and bring the price of silver back down towards a now support if it breaks obviously our resistance. We already talk about copper, where we can be going. Bitcoin looking to, oh wow, this is a nice consolidation stage after this break to the upside. Should we continue to see this, we can use our trend tool. Where can we use our trend tool? We can use a previous low, this one, but I'm gonna take this low out of this particular consolidation stage. movement. So that's this is what we're gonna do. So should we see a movement to the upside, we want to be obviously target our Fibonacci golden ratio of 0.618. Right, that's our target. So obviously we have our resistance 25,000. That could probably also happen. All right, let's do that. So let's take a look now at the euro. Euro is lingering, is fluctuating right around our pivot point. 102.395 is our resistance. But I have the one parity as my support. That's obviously anything below our pivot, which is acting right now as support, can be taken. So we have the dollar index. Dollar index 105.86 is my support. 107, 100 is my resistance, and fluctuation between it can be seen. Should we come back, or should we see a movement to the 105 level, we'll probably see a nice movement to the upside on gold. Right? Well, this is for now the analysis for today, Monday, August the 8th. Thank you for watching.